Hello and welcome to another video about the S&P 500. Not covering it too often on this channel. Recently I covered the Nasdaq a few times, and yeah, it's time to update on the S&P. If you're interested in daily video updates about the S&P, check out our stocks membership. You'll find the link in the description. It's also pinned in the comment section where I cover the S&P, ES futures, as well as the Nasdaq plus stocks like Tesla and PayPal and so on. But yeah, I mean, we just had some news came in that the tariffs apparently are going to be paused by 90 days. So great catalyst to allow a very oversold market rally and start that fifth wave to the upside we've been watching for, or the B wave. I mean, I shared it in recent days with our members that we should be very, very close to starting either the B wave or the wave 5. And I used an initial trigger point, like a resistance area, which is now broken, that shifts now the focus, first of all, to this resistance area. And if we can break above this key pivot, then we can watch for that fifth wave to the upside. So as it still stands that I'm not confirming a bear market yet. I know people are already looking for that and expecting a bear market to unfold and everything. And I think we are very, very close. And I said to you that I find it probable that it will start very, very soon. And I'm not ruling out that it already started. That would be the white scenario, essentially. But I can tell you that if we now rally correctively and then break below this previous swing low, that would be further evidence that a bear market has started. Now, okay, I mean, just take how much have we dropped? Like 20%. People call that already a bear market, and technically you could call it one. But what if we now recover to one more high? Do we really call that a bear market? I mean, when I talk about bear market, I'm talking about one that could last 5 years or so, 10 years maybe even, yeah? So because we are coming close to the end of a nearly 100-year-long lasting impulse on the S&P. I'll show you that in a minute here, or just now actually. Nearly 100-year-long lasting impulse to the upside. It's of course a bit tricky to pick the exact top, right? But I've been warning for the last few months throughout 2024 already that we're getting close. But so far I could not confirm it. However, it has been quite clear, I think, for most people who watch this channel, who follow my analysis, that a sell-off that we've just had was imminent, was to be expected. And however, it's always the first decline. I'll go back to the shorter time frame chart. It's always the first decline that sets the stage for further downside. So once we have a top in place in wave B, we can calculate the target for the next decline. And it's not going to stop there, most likely. If we see that, this could just be, and I haven't labeled it fully, but that could just be the larger A wave, yeah, of an even larger correction. So basically, if we don't rally to a new high from here, I see this only as a B wave. This resistance area is relevant. And if it's only a corrective bounce, then, and it would be a 3-wave move, then I'm going to watch for 5 waves to the downside. Yeah, so let me explain that in more detail. I'll go to the 1-hour time frame. So for those who are wondering how would the microstructure look like, best I can tell right now is that this is likely an A, B, C, which we will have to see how high this goes now. I mean, again, when we talk about microstructures, that's what I update in our membership a lot, but we would probably be dealing with this, that this is only the initial A wave. If the pullback remains corrective, yeah, then we could watch for one more high in wave C. Either way, it's this resistance area. We've nearly reached it already. I mean, it's very fast price action right now due to that news event. So bottom line is, if the next pullback is corrective, it would likely be a B wave. And then another rally can take us higher into that resistance area. And then if the next pullback is corrective again, it would likely be the 5th wave we're tracking, right? I have to be a bit careful here because the larger time frame, yeah, we track it as an ABC. So yeah, the 5th wave would also be an ABC structure to the upside. That fits quite well because so far the rally from the Monday low is a 3-wave move. So 3 waves could also be the A wave in the yellow scenario, something like that. But that remains to be seen over the coming sessions. I think the bottom line is we've held the larger support area I communicated so far for this wave 4 pullback. That's why we cannot rule out another high. And it really depends now that we have an established low, local low at least, we have to pay very much attention to the structure of any pullback. If pullbacks remain corrective, then we can watch for higher. And please note that the current structures are very, very delicate. Been warning for a while that we are likely going to deal with 3-wave structures in both directions for quite some time. So it's not an easy area, let's say, to navigate. It's quite tricky because we're dealing with 3-wave structures. So yeah, that's the update about the SPX. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you're interested in daily updates, video updates for the S&P, the Nasdaq, sometimes other indices as well, and many stocks, then yeah, check out the stocks membership. The link is in the description. Thank you very much. Bye-bye.